Samantha Rolf, welcome to the Buyer's Insight. How are we?
I'm well. How are you?
Good. So I'm going to dive straight in, and I'd like to rewind to the very beginning on where you grew up. Grew up in Brisbane.
Yes, grew up in Brisbane.
And you moved to where first?
Moved to Sydney
Yeah.
first. So I guess I'll start about maybe why I got into finance. So I started looking into finance because I had probably a personal interest in investing in property and growing my own portfolio.
Yeah.
So that was initially what got me into that space.
Yeah.
Once I did that, I went to uni and started studying finance and finished my degree there.
Was this in Sydney or Brisbane?
This is in Brisbane.
Yeah.
Yeah. And
Okay.
then I finished that and got my first role at Macquarie
Yeah.
at the bank.
What
And
were you
then-
doing? What was the role?
So I actually started on the phones
Yeah.
at Macquarie, and then I moved into a credit analyst role. So Macquarie had a period of time where they onboarded quite a number of credit analysts, people who didn't have experience.
What does that involve? Are you assessing like applications for, say, mortgages or credit cards? Or
Yeah, so it was assessing applications for mortgages. So
Yeah.
it was they were really trying to grow their mortgage book at the time. From there, I moved into a sales role at Australian Finance Group.
Yeah.
So they are like an aggregator. Basically, when you're a mortgage broker, you have to be a part of an aggregation company.
And can you explain a little bit of what an aggregator is?
Yes.
Exactly.
So an aggregator is essentially a company that has a credit license.
Yep.
As a mortgage broker, most mortgage brokers operate under an aggregator as a credit representative.
Right.
And that aggregator provides you with the lending options so that you can choose and apply with lenders under their panel.
Right.
So they give you the access to the lenders to be able to submit loans on behalf of clients.
Yeah.
An aggregator, and one of the benefits of operating under an aggregator is that they look after a lot of the compliance. And if you apply for your own credit license, you're responsible essentially for that compliance piece.
Right.
So there's a lot more work involved in having a license.
Yeah. Okay. Makes
Yeah.
sense. So you were working there, and
Yes, so I worked there for 2.5 years, sort of through COVID.
Yep.
I moved down to Sydney, and I worked in a Sydney portfolio, and then I moved back up to Queensland, and I looked after a broker portfolio here. So my clients were mortgage brokers.
Yep. Okay.
Yeah, it was
Nice.
a really high volume, like transactional type of role, but it was
Yeah.
great because I got a lot of insight and I guess saw so many deals come through.
So you also mentioned that you own property as well.
Yes.
Yeah.
Yeah. So I bought a property. My first property, I think, when I was 20, and then
Super young.
I was quite young.
Yeah.
Yeah, I think about it now, and I was
Who
like,
planted
wow.
that seed, or what got your interest?
Yeah, I think basically the property that I bought, I had a connection with because I'd grown up there, and my parents had to sell that property.
So it was a family house.
It was a family home.
Right. Whereabouts was it?
In Ashgrove.
Yeah.
And it came back onto the market, I think, maybe 3 or 4 years after we sold it the first time.
Right.
It came back onto the market, and my friend actually sent me the link,
Yeah.
and I was like,
Wow.
this is my opportunity. I'm
Yeah.
gonna buy it back. So so that was
That's
sort
so
of the
cute.
first the
Yeah.
first property, and then from there I've sort of bought and sold a few other properties in the Brisbane area.
Okay, and so now you have your own mortgage brokerage firm, and
yes.
you're based in Brisbane, Balmoral.
Yes.
Okay, tell me a little bit about that.
Yeah, so I started the firm with an ex-colleague of mine from Macquarie, and she's actually based down in New South Wales, and I'm based up here in Queensland. So we decided to start the firm because we've been in banking for such a long time. The banking environment has changed quite a lot in the last couple of years, and there's actually been a bigger transition from bank to broker.
Yeah.
It's quite common for that to sort of happen. It's almost the logical next step.
Yeah. Why would you say that it's happening?
I think it's happening because of what's happening in the market. there is a lot of like cost cutting measures and things like that
Yeah.
that banks are sort of enforcing internally.
Okay.
And it is creating the type of environment that I think people, they're starting to consider what other options might be out there for them.
Yeah.
I think it's also that people are looking for flexibility in their work, and broking is probably, I think, one of like the most fragmented industries in that you can set up a business as a sole trader. It's quite common to operate as a sole trader.
Yeah.
So it's very easy to just go out and set up and start without too many overheads.
Yeah.
So it's
Okay.
quite easy to transition.
Yeah. And so how many people are working at your brokerage? And-
Yeah. So myself and I've got my business partner, Tiffany, and we have Effie, who is my dog, and she's not technically working, but she does come to
Emotional
meetings
support?
with me. She is emotional support. Yeah.
Nice. Okay. And so, like, when someone inquires with you and your company, what's sort of the process? Can you lead us through from initial phone call to finalizing a loan?
Yeah, sure. Yes. So initial phone call will normally have a bit of a sort of a discovery call
Yeah.
where we'll find out what your goals are, what your plans are, potentially what your current situation may look like, and where you're looking to head, and to see whether you might qualify to be able to access lending.
Yeah.
If we think that you can, that's great. We'll take you down the path of completing a full fact find, which is basically like collecting all of your financial information. So
Yeah.
assets, liabilities, understanding your income. Once we've got that, then we'll start to look at different types of loan options that might be suitable for that, and also that align with your goals.
Yeah.
Once we've chosen a loan option, and we will recommend 3 to you, then we move forward with submission. And then we will, we'll basically keep you up to date with how the bank is progressing once the loan's in there.
Yeah.
After submission and after that's been formally approved, then we would prepare you for settlement, which basically means educating you throughout that process on who you need to be speaking to, for example, solicitors and different people that you need to get involved at that point in the process, and make sure that we navigate it all the way until you're in the
until it's settled.
Yeah.
Okay. And obviously with different buyers, there's obviously in different financial situations.
Yeah.
Therefore, does that play, depending on their career, their job, their earnings, their debt?
Yes.
Some people, don't need a long finance clause when it comes to purchasing a property. Some only need, 24 hours. Some need 7 days, 2 weeks, 21 days. Can you explain a little bit more about, why some people require more time or some lenders require more time in that regard?
Yeah, definitely. Look, to be honest, I would say in most cases it comes down to the lender time frame.
Yeah.
I don't think it's necessarily related to the person's situation. Lender timeframes can vary like significantly from 24 hours to 21 days, for example, to get an approval. And that's highly dependent on what type of volume they have coming through. And that's driven by, whatever strategies they have going on internally. So
yeah. Okay. Mainly to do with the lenders.
Yeah, not necessarily the complexity of the client.
And what would you say, as a mortgage broker, what are some of the most challenging factors that you come across on a day-to-day basis?
Day-to-day basis, I think probably at the moment it's the market is challenging, and so what we're seeing is a lot of people wanting to get into the market.
Yeah.
And I think the challenges are trying to find a lender that actually works for them. Because servicing is really tricky, and people need to be earning quite a lot of money basically to be approved for a loan at the moment.
Yeah, so just getting a contract on a property seems to be the hardest factor.
I think so. There's a lot of pre-approvals that we're seeing, so people are genuinely keen to get into the market. It's a fact of finding a property that they can afford. So the market, the value of property, I guess, is one side of it, and then the second thing is trying to get a bank that will work for them and their situation, and matching the two together.
Yeah. Okay. No, that's good information.
Yeah.
And how has the mortgage industry sort of evolved since you first entered in finance that where it is today?
Yeah. So mortgage brokers used to write, I'll probably get this number wrong, but it was less than 70% of volume or deals. Might have been closer to sort of 50% of bank
Yeah.
deals used to come through from the broker channel.
Yeah.
The rest of bank deals would be received direct. Now we're close to the 70% mark. So there's been there's been a lot of growth, I guess, in the broking space. There's a lot of new entrants into the market.
But there's a lot of people that, are thinking about doing that, but they can also go to other brands, say like Mortgage Choice and those big sort of brands. What would you say the advantages are of just starting one yourself or going under a big name like that?
Yeah. I think starting a broking firm yourself is great because you have the flexibility to make it your own and set up your own processes and, I guess, flows and I suppose set the tone for how you want to work with customers. I think there's some challenges with that too, in that you're wearing, a lot of different hats and you're sort of doing everything end to end. I think the benefit of joining a brand like Mortgage Choice is that everything is set up. A lot of the time, the leads that are coming through will be sent to you. So you will have the opportunity to get leads without potentially going out and selling yourself or networking with people.
Yeah.
So that's the benefit of that. You don't have, I guess, the flexibility and autonomy though. So
Right.
yeah.
Okay. No, that makes sense. And what would you say some of the biggest misconceptions are for people looking to get a mortgage that you sort of come across on a daily basis?
I think there's quite a few. I think some of them would be that it's difficult to borrow if you're self-employed. A lot of people think that there are challenges around that, and it is a more complex scenario, but it's definitely possible.
Yeah.
Even if you are short-term self-employed, for example, people who have potentially bad credit or have missed repayments and things like that, there are definitely still ways for you to navigate and get into the market.
They usually just say second tier or third tier lenders, usually at a higher interest rate, or
Sometimes it really depends on the type of debt that you've maybe missed repayments on. So it's scaled based sort of on like a level of importance, I guess. So
right. So you'd say a mortgage, say if you missed a home loan repayment compared to a credit card or an afterpay payment,
yes,
they're all valued differently.
totally.
To the lenders, right?
Yeah. So like if you were to miss, and I would say as well that it depends on the lender. So you've got a lender like, say a Macquarie, for example, who don't really tolerate late payments generally. But then you've got other lenders who are more flexible and open to making considerations depending on the strength of the overall deal.
Yeah.
Conduct is probably one of the biggest or like the hardest things to overcome, but it is about positioning it that if there are credit card payments that have been missed, that doesn't necessarily mean that they're not making their big repayments. It is, however, like a flag or an indicator if you are consistently missing payments of those types of debts, that it may lead to you, or you may be under the assumption that they're in financial distress or something, and it could sort of escalate. So I think that's just about looking at the deal overall and working out, how it feels.
Yeah, gotcha. Okay. And what sort of like tips or advice you could give to someone that's thinking about, say, buying a property that maybe, is a little bit all over the shop with their finances at the moment? What sort of things could they start to implement to, get in the best financial shape prior to approaching someone like yourself?
Yeah. I think what you could do would be, depending on whether you're, I guess, a first home buyer, or depends on what the scenario is.
Yeah.
I would say trying to keep on top of your repayments if you do have debts. Try to make them on time. I think the second thing, if you are purchasing a property, maybe save as much as you can, and show that you've got evidence of that happening sort of consistently. If you are in a position, I think, where you are working for someone else, potentially making sure that you are negotiating your contract on a regular basis with your employer to see are you due for a pay rise? Is that potentially something that's coming up? And really planning, I think, your mortgage journey around those types of things, and bonus time and tax time and that sort of thing.
Yeah, no, that's good advice.
Yeah.
And so obviously since you first started to where we are today in the industry, there's been a lot of changes when it comes to technology and different tools that you can use. What are some of the tools you're like implementing in your business, and how have you sort of seen it change? Because originally when you entered, you probably wouldn't have been able to assess someone virtually 100% compared to where we are today, where you just cross-check the IDs and you have these different tools now. Can we talk a little bit about that?
Yeah. So mortgage broking, I think, is a really manual process. There is a lot of human touch points throughout the process. So it is still like that, although it can be automated, a lot more of it. So I think the biggest change is that brokers previously didn't necessarily have a sort of a CRM system. So now that is something that broking groups have, and they have implemented, and something that we've also implemented. And a big piece of that, I think, is the client nurturing. So the email automation that links to that CRM to sort of keep clients informed as they go through that mortgage process. It's just an easy way for them to keep on top of things and for you to keep in contact with them. That's something that hasn't really been a part of the industry probably until maybe in the last couple of years that started.
Like COVID, it sort of really
and the benefit
off.
I mean, brokers used to have to be face-to-face with clients in terms of completing that client interview. Initially you did have to generally see the client. Now a lot of banks are accepting online identification, and they have their own ways of verifying that ID for clients through apps and things like that, which has been really great because it means you can really service clients anywhere in the country. It doesn't matter where you're based.
So you service all of Australia now? Right. Okay, cool. And what motivated you to start your own brokerage, and what gaps did you sort of see in the industry before starting?
I think what motivated us to start is that there is the opportunity to make it more streamlined. I think there's also a big need in the market at the moment, particularly for sort of first home buyers and people who are trying to get into the market, to educate them in how to do so. And to give them that support and the time that they need. I think what we see a lot of now is through online lead generation, there's a lot of people maybe like calling through to clients and not being able to invest the time that they need to sort of give them the information for them to feel comfortable making a decision and moving forward with something as big as purchasing your own home. So that's sort of what really drove us initially to get into the market, is that we had, I think, this skill set to be able to do that and the time to spend with people.
No, that's good.
Yeah.
And so what are your, like, obviously you're really early on in your journey, and it's quite a new business, but you're obviously doing really well. What are the sort of goals or aspirations that you have for your business?
We've got a lot. So I think a big one for me at the moment, it's something I keep thinking about, is the, I guess it's sort of like a honeypot, like analogy. So when you have a business like broking and it's service-based and you have a lot of complementary services, so for example, buyer's agents, solicitors, financial planners, for example, all of those people combined actually create that total value for a client, in my opinion. So I think what would be great is creating almost a bit of an ecosystem for clients, whether that's, I think at the moment it's really in person and being able to connect with other people in the industry, but ideally online, creating that ecosystem that clients can, I guess, move between services like seamlessly and have access to those services and feel like they're really like nurtured in that environment, so that you can provide, I guess, more under the one banner.
Yeah.
Yeah.
Okay. Fantastic. And so do you think you'll just keep your office in Brisbane, or you'll do offices in, say, Melbourne or Sydney and
Yeah,
different places?
I think we'll have one in different states. I think ideally Sydney, Melbourne, Brisbane to start,
Yeah.
and potentially over to Perth eventually. We'll
Yeah.
see.
Yeah.
Yeah,
Okay, cool. Must be huge potential there. It's a
yeah,
massive industry.
it is. Yeah,
And so for anyone that's, say, thinking about starting, along
yeah.
your lines with a brokerage firm, what sort of advice would you give them if they were just starting out?
Yeah, I think thinking about whether you, like you said before, you want to work for someone or whether you want to start your own thing, that would be the biggest thing. If you
Yep.
did want to start your own thing, working out your split of working out where your business will come from, and really thinking about that and making a plan on how you'll sort of achieve it.
Yeah.
Not getting too like fixated on the numbers, and just keeping an open mind and understanding that I think being a business owner, that there will be ups and downs and there will be a lot of hours that you potentially work and don't get paid for.
Yeah.
But the benefit will come in that you're doing something that you're passionate about. So it's I think it's just sticking it out.
Yeah.
Yeah.
Yeah. Okay. That's good. And so some mortgage brokers I've noticed have basically a model where they charge you up front to
Yeah.
engage their service. So then they can start assessing you and like doing the loan application.
Yeah.
But majority I've found won't charge anything.
Yeah.
And because obviously you get paid by the lenders.
Yeah.
So I'm just wondering, what's your sort of model?
So pre-approvals are something that brokers will sometimes charge for.
Yeah.
The numbers on pre-approvals are that about 30% of them actually convert. So they're quite low.
Right.
And so you will see certain like banks as well moving away from pre-approvals just because of like the time spent. So
Why do you think that is?
just because they don't convert. So they're almost lost.
They
They're
just don't know
losing
where
money.
to start when it comes to buying a property, or?
Potentially that could be a part of it.
Yeah.
I think there is, people are scared, I think, to commit. Maybe they can't find the right property, or maybe their expectations aren't aligning, with what is out in the market and what they can potentially afford. So they might drop off.
Yeah.
I think there's also like an education piece around pre-approvals and sort of educating clients around what they mean, how long they're valid for, that you will get a credit check on your file as well, and then you'll need to renew it if you don't purchase within that sort of time period. So I think that's a big one as well.
Yeah, like when I deal with a lot of clients, typically it's beneficial for them to have the pre-approval in place, just because sometimes we've had clients where they've had a mortgage broker or a friend tell them they could borrow X amount, but they haven't done the pre-approval.
Yeah.
Then you put in an offer on a property and then found out, they could only get 100,000 less or whatever it was when it officially went through.
Yeah.
And so, that's some of the biggest reasons why we tend to always, qualify a buyer to make sure that they can borrow what they say they can.
Yeah, that's a good point. I think pre-approvals are good.
So if someone gets a loan through you, the purchase of property, sells it within 2 years.
2 years,
then basically you don't get paid.
Generally, yes.
Okay.
Yeah. So there are different clawback models now. So banks are starting to change that a little, where sometimes it's a tiered structure. So after 12 months, you may only have to pay back 50%, for example.
Yeah.
But yes, you will definitely need to pay a portion, if not all of it, back.
Yeah. Okay. Well, that makes sense.
Yeah.
Yeah. And so now, obviously, you're on the front line and you're dealing with, buyers at the very beginning of their journey.
Yeah.
Would you find right now in the marketplace you're seeing more home buyers, investors, or?
In Queensland, I think there's a lot of investment. There are still quite a few first home buyers in the market. There's still a little bit of refinance activity as well. So people who have rolled off their fixed rate from, a few years ago where it was 2% and now they're sort of at that 6%, they are starting to look around to see what other options might be available.
And what's your prediction throughout the year?
The way that like banks price their interest and their rates, I think if you look at the swap rates overseas and you look at those over the next 5 years, you'll see that they are decreasing.
Yeah.
meaning that the assumptions of the future are built into that. So we can assume that the floating rate will follow that decreasing swap rate as well.
So you're starting to see it decrease overseas, or predicting?
Yeah. If you look at that swap rate curve, that gives you an indication of where the market currently thinks interest rates are going.
Right. So you're saying that's what you're seeing now, so that could be in 2 years' time.
Yeah. So this year, I think, I think that the home values are still increasing. They are increasing quite a lot, particularly in Queensland. So that's continued. That could be because prices of property here are considered undervalued by the rest of the country as well. And that's driving that investor migration and everything into Queensland. So I don't think that will stop anytime soon, which will probably keep driving prices up here.
Yeah.
In terms of interest rates, I think that I think they will start to decrease this year. I don't think it will be by a lot, but they will start to decrease. And I think the fact that people's savings are depleted, I don't believe that that's going to continue to drive a lot of inflation and growth in the market, because people are sort of starting to run out of money, basically.
Right. Okay. And now, because we've had interest rates on hold for the last few months, are you finding a lot more confidence has come back in regards to, say, inquiries and stuff on your end?
I would say it's steady. I probably wouldn't say it's like confident. I still think people are being a bit cautious. I think people are definitely still looking at Queensland though. I found that people who I've been speaking to from other states, like there's investment happening up here still, and they're looking for options. So I think it honestly depends on the client's situation.
Okay. And would you say that majority of your buyers that are coming through are purchasing here in Queensland or interstate, or?
Mostly in Queensland.
Brisbane, Gold Coast.
Brisbane. Haven't had too many at the Gold Coast yet. I'm sure that will come. I think the Gold Coast is almost an economy in itself. It's completely separate, and
it's like a little baby city.
It is. But so much potential. So I think that the prices here are probably going to maybe increase like on par with Brisbane or maybe higher.
It's booming. No, that's cool. And so are you planning on purchasing more properties for yourself, or what are your sort of aspirations in that sort of side of things?
I'd love to. I think, it would be great over the next sort of 5 to 10 years to continue to build that. I love Brisbane and or Queensland, and I guess investing in Queensland, I think that's where I'm focusing anyway. But
leading up to the Olympic Games, there's definitely a lot of hype, a lot of price growth with jobs and infrastructure. For sure. Okay, and so now, like, you guys are pretty active on social media. How much business would you say comes in through social media, through your social channels, compared to, say, traditional channels like referral partners, real estate agents and stuff like that?
Yes. Social media at the moment for us is not generating maybe 10%. It's quite low. I do have spoken to some other brokers who are also, I think, quite active in social media and have been on there for a number of years. Last year, one of the brokers I spoke to actually generated 34% of his business through that channel. So it's quite, it can be beneficial, I think.
So the rest of the business is basically just coming through referral partners, or do you guys advertise a lot?
No, we don't advertise, and we haven't advertised yet. It is something that is in the pipeline for us. So majority of it through referral partners at the moment, and then we're actually building out our direct channel as well at the same time, or the back end of that, which essentially is sort of an online option for clients. So okay, nice. So out of the different industries that are referral partners, which one would you say is the most active? Yeah, that's a good question too. I think financial planners are really great to work with. They are quite active and, I guess, invested in their clients and their future plans. So a lot of the time, they will lead clients to brokers to have discussions. I would also say real estate agents are relatively active.
Yeah.
If they are high volume, like they're a great partner as well. Very different approaches. So a real estate agent is a more transactional type relationship. So you won't maybe have the level of detail, but maybe higher volume, I would say, through agents versus a financial planner who has a really good idea of the client's position and scope. Yeah.
Because a real estate agent's really just dealing with buyers on the front line that don't necessarily know too much about them.
Yeah, exactly. And more solution focused, I think. So trying to get an outcome for the client so that they can, and they move quite quickly, which is great. So, yeah.
Okay. One final question for you. When you look back on your life to where you are today, what is the one thing that you're most proud of?
Oh, gosh, that's hard.
It's a tricky one.
Yeah.
Isn't it?
Personal or professional or?
Either.
That is hard. Look, I think probably starting the business has been like one of the biggest things I've done professionally. So I'm not just me, obviously Tiff as well, but I think, I'm pretty proud of myself for doing that and taking the leap, I think, and just the opportunity because, who knows where it can lead you.
Yeah,
so,
exactly right.
Yeah.
Okay, amazing. And thank you so much for coming on. Now, if people want to find you or get in touch with you, where can they find you?
So you can find us at Your Money Home Loans on Instagram, or you can, I guess.
Just get in touch.
Yeah.
Instagram. I'll be able to find you.
Yeah.
Perfect. We'll chuck it in the show notes anyway.
Okay, cool.
Amazing. Thank you so much for coming on today.
Thank you.